Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Today we're having fun talking about single-tenant net lease investment properties. My guests are Tim Kinney. He's Senior Director with Marcus & Millichap Capital Corporation, and Nancy Miller, President with the National Net Lease Investment Group of Bull Realty. And before the break, you guys were talking about we're kind of at a tipping point, where we've been seeing cap rates reduce and compress, which means values have been increasing for pretty much 10 years. But now you guys, from your desk, from what you're seeing right now, you're starting to see things change a little bit. So if you're are going to sell, you're thinking about selling in the next 4 or 5 years, is it time to sell? I mean, if you were especially if you're one of those guys, I'm waiting for the top of the market.
If you're asking me, I would say that if you've got a lot of term left on your lease, it's a perfect time to sell now because you are at the top of the market. My brother owns a Wendy's with a couple partners in Charleston, and it's on a double-sized parcel in front of a Bilo or something. And I said to him 4 years ago, while there were 9.5 years left on the term, I said, Marsh, go ahead and let's get this on the market. And I gave him a valuation and so forth, and he said, yeah. And his partners said, it's look at this, the rent's going to increase soon, and this, that, and the other. And we had a discussion last week, and I said, Marsh, now you have 5 years left on the property. I said, I've got to tell you, it's not worth what it was worth 4.5 years ago, and it's just going to decline. And that's so the point would be sell now if you're going to sell for the long term, or if it's a short lease and it's good real estate, maybe you should hold on to it and not worry about it.
Not worry about having a short lease?
No, because if the real estate is really good, then it becomes another story.
Yeah. So Tim, what are you seeing from your desk? Are people starting to see, all right, well, I guess if I'm going to sell in the next several years, it's time to do it? You're seeing the tables turn a little bit?
The tables definitely turned, and last week being Thanksgiving week was a short week, and we had a number of deals where me personally, we had someone that was used to, say, a 10-year fixed rate at 4% on their debt, and now it's 4.65. They have backed out of the deal. This is a 1031 exchange, and so I think that they had sticker shock, and I think once people kind of recalibrate, they'll see, hey, wait a minute, we've got historically low interest rates. I'm doing this for a reason. I like the single tenant net lease market, but they're going to have to adjust to a little bit lower returns. Now that property is back on the market. The seller, has reasons they obviously want to sell as soon as possible. Are they going to adjust their cap rate? I think they'll be willing to do so. And that's a retrade, we call it. So we're going to see retrades, and we've seen a number of them, Michael, in the last literally 2 weeks, and last week being a short week, and now here we are midweek, we're seeing that real world.
Yeah.
If I can add to that, we've had 2 instances with a 1031 buyer where we made a good offer and they chose the other offer. And we had to name the 1031 properties. 2 days later, after the naming, they come back, hat in hand, and they say, well, can we do the deal with you? And we said, we've already named where that ship has left the dock. And they basically, the sellers have a mindset of 6 months ago where they can command top dollar, and the brokers, I think, have an obligation to the sellers to say, let's get real and look at the market right now.
Yeah, and you guys are on the front line and you're seeing it. And one thing, though, that we still got to keep perspective on is that we still have really low rates and positive leverage on most of these deals, right, Tim?
Yeah, and I was looking at, again, the 10-year Treasury today versus where it was a year ago. Well, it's about maybe 15, 20 basis points higher. It's not a huge difference. Of course, we've seen cap rates. Where were cap rates a year ago? So maybe we need to adjust that. But it's not the end of the world. Just people need to just be aware of it. And then we run, Nancy knows I have my spreadsheet on steroids that gives all of your metrics. But you got to look and make sure the deal still makes sense for you long haul. You got to understand what your loan or constant, your debt constant is. That's what an astute investor has to look at, which is your debt service divided by your loan amount. That's going to tell you whether or not you still have positive leverage or not. And you add up a lot of different numbers. And at the end of the day, if you got a strong tenant, and one thing I did want to mention is that if you have a shorter lease, we're going to look, see if we can get those store sales, if possible. And if you got strong store sales, and it's a good location or a good market, stay in that deal, and you'll get
all right.
renewal.
All right. Well, and stay with us. Next, we're going to have some hot tenants and some tips for increasing yield. This is the Commercial Real Estate Show. Hey there, thanks for checking out the Commercial Real Estate Show. Don't miss a video of special interest to you. Be sure to subscribe below. And if you appreciate the videos, be sure and thank our sponsors. There's a link to more information about them in the description. For more videos, podcasts, and articles, check out CREshow.com.